Fear and greed. These are the two opposing forces that you hear are responsible for financial markets moving in price. But after watching price charts every single day for the past 15 years, I believe it's fear alone that moves markets. And if we want to see crypto move higher in the short term, we need to see a dose of fear first. Hi, this is Doc from Ready Set Crypto with your 1-minute market report for Sunday, September 15th. In today's Market Minute, I'll focus on Bitcoin, which has been in a symmetrical triangle pattern for the past 3 months. Thomas Bulkowski, who is the father of chart patterns, put the upside success rate of this breakout at 94%. And my fractal energy studies that I've been using in our trading room show Bitcoin in particular with a huge potential for a move very soon, within a week or so. Based on what I'm reading out there, I think everyone is sitting back and just waiting for this breakout move to occur. Like waiting for your Amazon delivery to come. You know it's going to happen and you just have to wait for it to show. But I think that the initial move out of this pattern might actually be to the downside first. And to understand why, we need to talk about fear and greed for a minute. The usual read on fear and greed moving market prices tends to be that we have greed at the very top of a move and fear at the very bottom of a bear. But that's missing the context of the move, such as how bull markets end up climbing a wall of worry based on skepticism and doubt. Here's my point. It's actually fear that drives market prices. It's not actually greed from those already on board that drives price, but rather fear of missing out, or FOMO, on the way up that pushes the price much higher. And of course, it's fear of loss that compels traders to puke out of their positions right at the very bottom of a sell-off. Fear is the strongest emotion and absolutely will move price. Let's find a situation analogous to today's consolidation. It was July of 2017, and the price was in a nearly perfect symmetrical triangle formation for the past month. Remember, Bulkowski said that the success rate of these was 94%, but he never said how it had to occur. Everyone's just sitting there waiting for the eventual upside break to occur. But when everyone sees and expects the same thing, the opposite tends to occur, which it did. This is where Twitter gets lit up by conspiracy theories about whales and dark pools and manipulation instead of the real culprit, which was the fear caused by the price not moving in the manner that everyone expected it to. And the volume at the bottom of this move confirms how many traders puked out of their positions from the fear. But that was just the initial move or the head fake. Bulkowski was right. It did lead to an upside breakout. He just didn't say how it had to get there. Enough fear was stoked up to form a toxic mix of skepticism, which got unwound to the upside as the larger bulls stepped in on the pullback and the shorts had to cover. And then the fear of missing out kicked in as everyone chased the move again. Price will always move in a way to screw the greatest number of traders out of the largest amount of capital. And that brings us back to today. A break above 11,000 on decent volume will initiate that breakout and get price moving again, and it might even have enough gas in the tank to retest the recent highs at 14,000. I really don't know how much fear that's going to create. But a break below 9,100, perhaps all the way down to 8,000, now we're talking fear in capital letters, and it might create that magic mix of sentiment that makes the big boys step in long and squeeze the shorts back up to 20,000 again in an epic move. As always, I'm not trying to predict the future because nobody knows what will happen tomorrow. My goal with today's video was to get you to look at this chart from a different perspective. So what do you think? Let me know in the comments below, and we'll see you in the next edition of 1 Minute Market here at Ready Set Crypto.